Good evening. It's almost 6 p.m. now. At this time of recording on the closing bell for week ending 16th of January 2014. Well, this week, as I said before, continuing from last week, we do have a very short trading week. As such, this evening closing bell for the week ending 16th of January will be shorter too, as it is not fair to comment on the market, especially the regional market where they have not closed yet. Now, going back from where I left off, um, last week on the 10th of January, the market was around doing 1825. If you look into a scheme of all things, this here, let me just show you here. This is not good. You got a two-bar reversal here. Maybe this chart will tell you. It's a beautiful two-bar reversal breaking below the 1820, and that seems to be pointing more to the downside. Okay, foreign funds has been selling very heavily. If you notice, I can't show you that because my Excel spreadsheet has some problem today. So just bear with me. The last 2 days, which is this week, they were selling more than 300 million. So we're closing about 700 million in there. So as such, the market has broke down this 1825, subsequent 1850. We are at the very critical part of this market in here. Make no mistakes, we are seeing a major SOW, sign of weakness. Breaking, as I said before, the support was at 1830. It broken down, so we are looking at the next support at 1800 level in there. May looks like come Monday, this is definitely going to be a short trade. And very important also at the same time, the FBM 70, which is the barometer of the small and mid cap stock, it is testing the 200-day moving average at almost just short of 13,973. So that is still pointing more to the downside, more to the downside. Now remember, the last time when this market really touches it was in September. It was tested it in subsequent market went up, but you could see we were doing some sort of a mushrooming down effect, and we broke through the breaking of the spline, which is the pushing to demand. The buyers did not come in to support at 1400. Subsequently, the market has broke down into this what we see here. Okay, on the in the bigger scheme of things, as I said before, if you've been following my blog, we now have a confirmed three down bar. Okay, the week before, expect uh, if going back on the 10th of January, my notes here, this is a second week of continuous downtrend. We got 1, 2, so we should have another one. The 1800 level, that will be interesting. So next week, by the time when I do the closing bell, will we see a doji tail black bar? It's going to be a black bar next week, or we will see sort of like gap down, close high on the Friday. Else, if we see a huge bar like this breaking up, but I do, when I was in the office, I was looking at Bloomberg. There are news, possible likelihood of a Bank Negara of Malaysia raising interest rate as much as 50 basis point. So make no surprise when you hear that. So this is coming up from here. It's yet to be unconfirmed. This 50 basis point interest rate raise. Now, anytime where interest rate raise, that will subsequently put a lot of so-called cost margin squeeze on the costs of each company. As you know, the property sector and construction sector has been deemed as a sector you should avoid for this year. Probably if you can short would be a better one, but looking at the KLCI now, 3 bar down, 1800 is the support, but I will think that is likely to break down and look for sign of strength at maybe 1790. Okay, so we are seeing, let me just write down here. Okay, we are in the third third week of down bar. Okay, expect SOS at 1730 to 1800. And today in the office, I was talking to some of the broker. They were looking. A lot of investor and retailer were looking for some Chinese New Year money. to trade. But unfortunately, smart money knows better. Smart money will know that Chinese New Year rally never comes. They very seldom do anyway. So what happens is small retailer will try to buy. When they did miss out the December rally, so they're trying buying the January rally. So subsequently missing it out and trying to get in. Guess what? They've been stampede on the way down there. Okay. So that's for the KLCI in here. I won't touch so much on the Singapore side because the market is yet to be closed. But quickly, just want to go through with you on the SGX side here. SGX is holding up subsequently, which is very nice. If you can look here, support is still at 3120. Tested the 3150, holding up. The low is still pretty decent. Okay, I do think a recovery would come better for Singapore because it's been down pretty much for the year for 2013, and Malaysia should go through a correction now. Now the question is how much of a correction? Is it going to be less than 3% correction or a 7% correction? Okay, coming into it, if you can hold, if the market were to hold at this rate, then after the Chinese New Year, we will see another perhaps sell down, but more of that on the February 15, 2001 for the market outlook, which I will be coming to you live on that one. So make sure you catch us on the internet and webinar on the 15th of February 2014. Okay, and